welcome. It's our second virtual annual ratepayer meeting. And I'm Darcy Ferguson, Director of Finance and Administration for the Special Areas Board. And I'll turn it over to Darren, who will introduce himself.
Hi, I'm Darren Jones. I'm the Coordinator of Financial Services for the Special Areas.
Yeah, so welcome to our second virtual attempt at having ratepayer meetings, and hopefully sometime later on this year when COVID restrictions come off, we'll actually be able to get back out into the country and meet with you personally. We'll see how that goes later on. So right now what we'd like to do is just talk about our 2020 financial statements, and we've got a slideshow with some interesting facts on it that we'll go through. And of course, we'll also we'll give you our contact information. If you have any further questions or anything, please engage with us and we'll try and give you the answers you're looking for. So if we could just slide ahead one slide, Darren. Great, thank you. So of course, COVID-19 way back 15 months ago presented itself to us. Certainly had some, we have a 2020 budget that we take forward to Advisory Council in the fall. So in the fall of 2019, we would have brought our 2020 budget forward for Advisory Council to approve. After that, the board also goes through it and approves the budget. We then start out 2020 with this proposed budget. Of course, with all of a sudden in March, we're hit with COVID-19 and the start of the pandemic, and the board and council then said, there's significant things going on. We have to make some changes to what we're proposing to do for 2020. So we actually went through that in a couple of different phases. So we called them phase 1 changes, phase 2, and phase 3. So the board and council were involved in all these phases. And so significantly what we originally did, taking a first look at phase 1, we did reduce our capital. We took some of the capital that we're planning on purchasing, we took it out of the budget. There were savings there. We then went back in and said, the construction season and the way we run camps, that's going to be a problem with COVID-19. And we made some changes that has an impact on our operational costs. We made some changes there in recognition of when we were going to be able to start up camps. And then we went back in based on all these changes and said, okay, what else is there? And we made some more reductions that we called phase 3. So in total, those were $10.8 million in cuts to operations and capital. And that was kind of coinciding with what we thought at the time could be our potential loss in cash flow due to the impact of the pandemic on oil and gas prices and the oil and gas industry. So we're kind of lining those two things up, saying, if we don't have this cash flow coming in, we can't make those expenditures on the other end as well. So we targeted about a $10.8 million decrease to our 2020 budget. And then we'll now start to talk about the actual operational results. So, of course, 2020, we do have the Auditor General does come in, sends his staff in to complete an audit of the Special Areas Board financial reports. We're happy to announce that the auditor did give us a clean report opinion again this year. And basically, the Auditor General states that these statements present fairly the financial position of the Special Areas Board trust accounts. So hopping right into the financial statements, the first thing we'd like to talk about is the balance sheet or the statement of financial position. So one of the key numbers on there, of course, is the cash position at the end of the year. So you'll note that for 2020, that was $49.3 million. And that's up significantly from 2019. And again, that number that it's actually up is 10.6 million. That's pretty much coincides with the 10.8 we talked about in the phase changes that we put through board and council. The other thing to note on this slide is the other key number in here is the taxes receivable. again, a good indicator of where things are at with the oil and gas industry and their cash flow problems, which end up becoming our cash flow problems. Now, back in 2019, we had an outstanding $1.8 million, again, mostly due from oil and gas companies, and that's after we had a $1.5 million write-off for doubtfuls. Well, the position is improved in terms of our net taxes receivable at the end of 2020, but the fact that the improvement is really not coming from payments from oil and gas, but from a larger write-off. So we have the problem with the oil and gas industry, and their cash flow is really impacting our cash flow as well. So our net position at the end of 2020 was $510,000, but we had to write off $3.1 million of doubtful accounts. Darren will talk about the impact of how we did get some of that money back from the province in a later slide, but yeah, we have problems there. All municipal entities are really dealing with this issue and trying to come up with some solutions, but for right now, it's a little bit dismal there in terms of being able to collect from oil and gas companies. Just a slight note, as we go on, of course, you can see our accounts payable balance, long-term debt, which is really starting to decline as we pay off the Acadia Foundation rebuild. But the other key number there, net financial assets, 80.4 million, up from 70.9. Again, that's right around that $10 million mark, which is the increase in the cash. So non-financial assets, this is the investments, this is assets, this is less amortization. This is the bigger picture of stuff that we use in operations for special areas. That has increased from 242 million to 244, and that just means that we've made investments in our capital stock slightly greater than amortization. So you'll note in there that we invested $6 million and that the amortization was about 4.9 million. And then that does bring us to the accumulated surplus. Again, you can see that it's up around that $10 million mark as well. And of course, a key component of the total accumulated surplus is the operational surplus, and that is up $9.4 million as well. So the key messages out of the statement of financial position is that the Special Areas Board is in a strong financial position, that the board does have sufficient financial resources to fund future operational and capital requirements. So that's a significant statement there. The board also has a significant financial reserve as a result of the tax recovery land sale process and investments in tangible capital assets. So that's roads, that's streets, that's water systems, things of that nature. And that the operational surplus available for funding of future expenditures now sits at 25.664 million. I'm going to turn it over, the statement of operations, I'm going to turn it over to Darren. Just a quick discussion about the difference between accrual accounting and the modified cash basis. So we do use two different kind of ways of accounting, two different systems. So revenue and expenses are on the same basis of the financial statement, so accrual accounting, and the budget is prepared really on a modified cash basis. So that's capital assets are considered to be cash out and things, just slightly different methods. But in the end, we also reconcile those two things with the Schedule 4 and the Note 13 to the financial statements. So I'm going to turn it over to Darren now to talk about the operational results for the end of the year.
Thanks, Darcy. So I'll go over first the revenue summary for the 2020 financial statements. In 2019, we had actual revenue of $51 million. Compared to this year, we were down significantly, down to 45.9. And in relation to the budget, like Darcy had alluded to, we did make some significant changes there. Initially, we had it budgeted at $52.4 million. This slide just shows you the historical trend of our assessment base. High water mark there back in 2015 of $4.5 billion. But for the last 4 years, it's been just below that $4 billion assessment mark. This is another slide. It just kind of gives you a year-over-year trend of the industrial mill rates. You'll see that we've leveled it off the last 4 years, and what we've tried to do is anytime that the school and seniors reduce their mill rate, we try and just step into that a little bit if we can. So again, it's been consistent, relatively the same for the last 4 years. So revenue summary, the big thing we talk about here is taxes, which takes up, which is about 60% of our revenue. Actual net taxes for the 2020 year is $27.6 million. We budgeted $31 million. So a couple big changes there. We chose not to do a bad debt levy to the industrial accounts in the year. Just because of their situation in 2020. And we did make a conscious effort, even though it wasn't big dollars, to move the residential up $500,000 from 2.28 to 2.78. In terms of leases, it was we budgeted $8.9 million. It came in at 8.1. The one other big number to talk about here was grant funding. We budgeted $5.9 million. The actual came in at 4.9. And the big thing there was that we didn't go ahead with the monitor water line. Of the grant funding portion of that was going to be about $1.5 million. On the other hand, we did receive some COVID relief funding called MOST. For $428,000. So this just gives you a little pictures worth 1,000 words pie chart of what our revenue is broken down to. And again, you can see our net taxes is just over half of all of our revenue, $27.6 million. Moving on to expenses. So in 2020, we budgeted $40 million on the accrual basis. Came in at 35. Now, as Darcy talked about, when we budget on the cash basis, we budgeted $53 million, and on a cash basis, we came in at 38. The big things there was, as Darcy talked about, we made some conscious effort to make some changes due to COVID. The one big thing was that we did have to delay our construction season by 6 weeks, and we went with one less crew being sent out for the season. The other big thing too is we did curtail our capital asset purchases just in anticipation of the cash flow issues we thought we might see in November. When November 15th did come around, this was not as big of an issue as we had thought as the oil and gas industry did start seeing some recovery in late last year. Our big department, or most of the spending occurs, is in transportation. So on a cash basis, we budgeted $33 million in expenditures. That includes capital. We came in at $24 million. Again, the shortened season turned out to be some savings. We also had savings related to that through materials contracts. And we also pushed a road project. The Gurlitz Road was deferred into the future. So on to administration. We budgeted $5.1 million, came in at 4.4. The big thing here, we did budget for bad debts. They were less than anticipated. Again, due to COVID, we had some savings that impacted our operations. Again, as Darcy said, the province did continue with their program to reimburse the special areas for bad debt, or the school portion of money that wasn't collected. So in 2019, we got $640,000. This past year, it was $978,000. Water services, we budgeted $3.1 million, came in at 2.8. Again, some slight operational savings due to COVID. The big thing here again was the Ontario water extension. That was a $2.7 million expenditure, again, of which we didn't go ahead with and had savings there. But it was offset by that grant funding that we never received. Ag services and pastures budgeted 2.6 million, came in at 2.2. Big thing here is with COVID, we chose not to move ahead with the Red Deer River program. It was canceled for the season. We also deferred some pasture renovations as well as some fencing work. In recreation, we budgeted 2.3 million, came in at 1.6. And again, due to COVID, the opening of the parks was delayed, and that resulted in some savings in manpower, contract, materials. Also with COVID and its restrictions, the activity at the Blood Indian store was also greatly impacted. One other thing that we did do this year too was we did assume operations of the Gooseberry Provincial Park from Alberta Parks and Recs in the year. So again, on the expenditure side, this is another pie chart just showing the magnitude of where all of our spending goes in the departments, and you can see that transportation services is over half of all of our expenditures. So in summary, we budgeted for a small surplus of $1,800, and with the conscious budget changes, we did come in with a $9.8 million cash surplus. Looking ahead into the 2021 budget, we do plan on having a small deficit of $163,000. Some of the considerations we got for this is we do plan on resuming our business back to a pre-COVID level of activity. We will be hiring a full contingency of seasonal staff, and yeah, we will continue on our plan for fleet replacement, GBC work, and we do plan on going ahead with the expansion trying to move ahead with the expansion of the Shirley-McLean line past Ontario. So with that concludes my presentation.
Thanks, Darren. So you did notice there was just an information flash on the screen there, but Darren and I can both be reached at the Hannah office, or if you go onto the website, you'll find our email addresses there. You can address questions there. And yeah, and we look forward to any questions you have. We'll try and give you more information as what's needed. Thanks for watching this presentation, and hopefully we'll get a chance to see you in the fall.